Is Costco at $994 a buy? That's what I'm going to cover in this video. I will not cover business model in detail because a lot of us already know Costco. I'll show some financials before I move on to the valuation. I'm going to show two cases, one with reasonable assumptions and the other one with great execution. Before I move on any further, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. Costco, as you can see on the screen, at $994 has a market cap of about $440 billion. The PE ratio is 60 and the forward PE is also about 55, which is on the expensive side. With respect to growth rate, Costco has always grown in a low single digit to high single digit range. You can see on the screen the average growth rate is in the low single digits. Also, Costco have net profit margins in the order of 3% because they only mark up their products by about 12%, and most of the profit that they get is through the membership fee. So it's not surprising to see that their net profit margin is only 3%. So every $100 of revenue that they get, only $3 will move onto the bottom line. So we're looking at a single digit growth and low single digit net profit margin, yet having a multiple of 60. So let me show you the valuation. In the reasonable assumptions case, in 2023, they made close to $245 billion of revenue. And remember that they were only growing in low single digit growth on an average for the past few quarters. Still, I am estimating 7.5% because they are doing a crackdown on the membership. So Costco is checking the face of the member, so it's not easy for us to use someone else's card anymore. So that's why I'm estimating that their growth rate would go up slightly, 7.5%. And I'm keeping the net profit margin as 3%. They consistently made less than 3% net profit margin. So I think 3% is reasonable. And I'm estimating a multiple of 30 because if a company is growing at low single digit or to high single digit percentage and has a net profit margin as low as 3%, I think a fair multiple would be 20 or low. But since Costco has tremendous brand value, I'm prepared to pay a 30 multiple. So with that, cap in 2028 would be $316 billion. They're keeping the share count same, 444 million. So I'm not doing any dilution or any buybacks. So with that, 2028 stock price would be about $713. Currently they're at $994. So if bought now, in my reasonable assumptions case, the gain is negative 28%. Let me show you the great execution case in which I'm estimating 10% growth, which is unheard of. They've never achieved that in the past few quarters, right? And I'm still keeping the net profit margin as 3%. I'm giving a higher multiple now. Earlier I gave 30, now I'm giving 35. And stock number of shares is also same. So the stock price in 2028 would be $933. Currently they are at $994. So that's negative 6% gain in 4 years. And that's not an attractive gain at all. So in both reasonable assumptions and also the great execution case, Costco is giving me negative returns. Currently people are paying it a 60 multiple. The reason is beyond me because I don't like the growth rate. I don't like the profit margin. Their balance sheet is good, but I don't think I would pay 60 multiple for that. It'll take 60 years for me to recover my money. So what am I thinking when I pay a 60 multiple, right? 30 is the max that I'm going to pay. And for my personal journey, the reasonable assumptions case is only giving me $713 target. So I would buy this stock if it goes below $350. Otherwise, I'm staying away. Let me know your thoughts in the comments. Thank you so much for watching.